are live. Let me just post this up to Twitter here. Awesome. Just want to thank everybody for joining in here today. So today, just want to kind of, go over the game plan, just kind of, take a look at everything that's going on. Futures obviously down again, VIX futures up. We'll see how that continues through the night. There's looking, kind of big picture, SPY. If you go to the daily chart, on the just the regular bar chart, we've got a here. So we've got highs right here. So we have a very potentially a one down, a two up, two wave up, and then the beginnings of a what could be a third wave down, right? So we'll see if it is a third wave down. I mean, not only will it take out October's lows, but it could continue, if not longer, which is usually the third wave is usually longer than the first, down. So we could end up, I mean, who knows? We could end up at, we could end up at an S&P at 200. You heard it here first. S&P to 200. So we'll see. This is kind of the year 2018 is kind of the year of opposite trends, right? I mean, everything that you think is going to happen, kind of traditionally hasn't been happening. And so that's kind of why I wanted to touch on today, just about managing risk, because I've been getting messages from a lot of different folks and stuff, and through the DM, through the private feed, the just private messages through Twitter and emails and stuff like that. And there's no doubt. I mean, this is a tough market. I mean, look, it is way different than it was right back in 2017, where it was just pretty much just going straight up, right? And so learning how to trade in these kind of like choppy, bear markets is going to be, really key, until the market decides to get a footing, and who knows what it's going to be, right? Like if it's 200, who knows? But whenever it's ready, to get its footing again and go back, it's going to be complex, right? Because bear markets move fast, so they make their moves much faster than bull markets. So unless you're prepared, unless you're comfortable with puts or shorting and know how to really preserve profit where you move your stops, you can get really messed up, right? So this is not the time, to be putting on, super long positions. You can do, I just posted, I'm doing a, kind of a bit of a, trial position. I talked about that, this weekend, that, I'm going to look at doing swing trading through, call spreads, just because I don't have as much time to trade intraday. So that's just, just using the methodologies and, the techniques I know that, should work, have a high probability of working, and just trying to use those to my advantage. So, while, kind of experimenting with some other things too. I'm pretty new to Elliott Wave. And so, I've got a couple positions on like the Procter & Gamble one. Looked like it was, and it is, and it did push. I think I said 95 it could push up to. So it got really, really close today. So, but I've got a position that I'm holding until April, where I think that if this indeed wants to keep going up, that it'll get up pretty high, and as long as it moves over $10 in either direction, my straddle position should be pretty profitable. So that's one thing going there. And I've got I just put on Johnson & Johnson today, as a short position. I know lots of lines, but it's pretty cool once you zoom into it. So because here, just kind of, everything kind of lined up perfectly, with a, basically, pretty much like a bottom here, 1, 2, 3, and the 3 consisted of 5 waves in it, 1, 2, 3, 4. 4 didn't extend below wave 1, or within range 2, which made it even better. Then 3 up, then it corrected back down in an ABC pattern to 4, and then 1, 2, and then here it's just kind of okay. It could have finished here where I thought it did, but it looks like extending a little bit higher, which would be, I thought, this 161.8%. If it pushes up there, that should be the completion of wave 5. So I put on a, just in case it was done, I put on a put spread through February on this one, because I do think that, it's gonna come back into this range here, and potentially, it could do ABC down, potentially do like, even start a 1, maybe in a 2 and 3 down. So I was kind of thinking it gets kind of closer to the, the fourth wave pivot by February, so sort of, before earnings. So might probably end up getting out of this position before earnings, but we'll see. We'll see how that one goes. So Just kind of stuff like that. So, but I wanted to talk about risk today. Of course, I want to go over game plan stuff too. But just so everybody knows, we have lots of traders that that follow me on Twitter and that are in our chat rooms who have different levels of experience, right? But everybody, at one point or another, puts on a trade that they're not comfortable with, and puts on too much risk, right? And so by risk, what do we mean? We mean how much we could lose if the trade goes against us, right? And so that's why in my rules on Twitter that I've pinned, that I've posted, number one is knowing the risk first, right? Before we ever take any trade whatsoever, not only do we need to calculate what the risk is, and we can do that by understanding candlesticks or understanding the setup, right? So if I, for instance, when I trade off, the hourly anchors, so take like the S&P today, or let's just take Google, because Google was one that I was able to trade intraday. And, just did puts, and, I was even late to the party on it, but it just, it just worked. So that was good. But if we go back to the hourly chart, the hourly candle chart, right? So we look at the anchor, right? We talked about this last night. So we go to the anchor here, right? We closed inside 60, right? We also closed inside day, inside week, right? So the idea is here, this is your anchor bar, right? We gap down, right? So we don't chase gaps on stocks that don't have real news, right? That's when we have stocks that have news or earnings. We can use the orbs, right? The opening range bars, the opening range breakout of those bars, and we could trade those in the direction of the gap. That's the easiest way to do it. You can do reversals, but I don't recommend it. It's not part of the rules, but you can. It could be just as profitable. You need to know what you're looking for, right? And so, so here, this was Google actually set up perfectly, right? Because it gapped down, it came back up, right? Tagged our 60 anchor, right? And actually, like the SPY missed it by a few cents, but Google actually tagged it by a little bit, and right there it could have been a short. Now, granted, VWAP was probably down, so there is a little bit of rule bending there. If you're going to do it, I didn't get to watch this morning, so I didn't get to see the price action. But if you're watching the futures and everything is pointing down, that is a reasonable trade. But what's your risk on it, right? So a lot of these bars, the range bars on Google, right, can be like $17, $12, right? $16, $16. This first one is $17, right? But this one here, the inside bar, was only $3.89, right? So your risk, right, the amount you're risking is $3.89 because your stop is either like right at the top of that 60-minute anchor bar or just a little bit above it, right? And so you're risking $3.89. And so you use that, right, to find out, okay, look, how confident am I in this setup, right? Am I bending a rule? Yeah, I was bending the VWAP rule, right? And so, I assume it was like, it fluctuates a little bit in the morning, right? So if it could have been a little bit up here before it really dropped down. But so you got to see how confident you are in it. So then that's how you scale in based on the size of that bar, right? So you could do something as simple as just buy one put, when it's coming back, when it breaks back to the downside, and then you exit that put when this, say the mother bar fails to the upside, right? So if that were to happen, you just get out, right? So one put, depending on where your target was, right? We knew we had a target, right? Because we have, we had our pitchfork up and everything, right? So, we had an ultimate target on it. So we could have done like a 10-20 put today. And at one point, the 10-20 is probably, as low as $2. Man, I wish I traded there. But let's say it was your ultimate target area, which was the the pitchfork median. So 10-20 you could have done. So basically, probably right there where it tagged the hourly bar, you would have done $2.75, right? Would have, let's say it cost you $3. So basically, your $3 here, right now, if it came up against you, you could have got out right here, and you probably only would have lost. Let's just say you would have lost half of it. You may have lost $150 on that trade, right? But if you held it, well, it went up. How much did it go up? It went up, as high as $12.80 today, right? So, that's almost, 4 times profit on that. So, like you can even see here, it was, profit today was, 300% profit, right? And so, Probably a little bit more if you got awesome fills on it or something like that. But you could have stopped early and just doubled up or whatever the case was. But either way, if you doubled on that, right, say $3, you would have made $300, right, just on that one. And that's that's a good day. That's not horrible. It's $100 grand a year, right? So one trade like that a day, and that's not even a lot of commissions, right? It's real cheap. And so this, all you got to do is pick a direction, and you're going to be great, and you can just hold it, and it'll eventually do great. And you end up like buying a lot of shares, right? And then it starts moving against you. You start losing money. You start asking yourself, "Oh my goodness, what's going to happen?" So we've all been in that situation before, and it's just important to know where your stop is and how much you're risking, and you have to really dig deep within yourself and find out if you lose that, is it going to hurt, right? And if it's going to hurt, you shouldn't take the trade, right? Or you should scale it down to where it's not going to hurt. So maybe you don't like losing $50. Well, if you don't like losing $50, then you need to trim it down. You need to look for either, maybe in this case, you could have done shares, like you could have done what is that, $3, so times 10. So, you could have done like 10 shares on this, right? And it went down $40. So, even if you did 10 shares on it, you still could have made, $300, $400 just on 10 shares, right? So, that was really minimal risk, right? So basically risking, $38, to make 400, right? So good risk to reward, right? And so that risk, $50 if you're trading shouldn't hurt you unless you do like 10 $50 losers in a row, and you end up being down $500, and that's a really bad day, right? Not fun. And so everybody's different, right? Everybody's pocketbook's different, everybody's wallet's a little bit different size. And so that's why it's really important to know where your comfort level is. And so, a good rule of thumb is, on each trade, don't risk more than 1 or 2% of your trade, right? Or of your capital, right? So if you have a $10,000 account, don't risk more than, $100 on a trade, right? And then you have a daily limit, right? Don't risk more than 2% a day, right? So don't risk more. If you have a $10,000 account, don't risk more than $200 a day. If you lose $200 that day in trading, take the day off, study, figure out what you did wrong, look at the other trades that you were looking at, and journal them, right? So you can learn from your mistakes and do better. So just kind of wanted to touch on that today because it's really important, especially in this type of market. So yeah, it's awesome. Like, it's fun to short and all that stuff, and it really is. But you still have to be, especially if you're new, and even if you're experienced, because you could think something's going to go down. Today was a great day for things to go down, but things still correct, right? And they still, go down, they come up a little bit, they go down, they come up, and that, if that starts eating into you and makes you nervous and all that stuff, you shouldn't be in the trade, right? So you got to give these trades time to work. But time to work where it's not going to hurt you, right? So that's kind of the key things I wanted to kind of point on there. So just real quick, I want to do a real quick game plan review. Just take a look at Morgan Stanley today. Double inside day. Worked great right from the open, right? We talked about this yesterday. So what happened? We opened here, right? Slightly under the VWAP. It came down. You have your stop right here, and you enter. You go long, and I think you could have gone long here. Let's just say like 44, 44.30. All the way up to 44.70. So, on a stock like this, intraday, 40 cents is pretty good. 1,000 shares, $400, whatever your preference is. Options, whatever the case is. So went up, kind of came back in and stayed kind of like near the top of the inside day all day. Let's see what it looked like on the daily. Right, still finished green. But you can see here, to that double inside day, to the upside, for a decent move. I got some feedback, some positive feedback today on Bank of America. That did well as well, but you got to manage your trades, right? Once you go green, move your stop up to profit, and don't let yourself go from green to red, right? And so today, didn't finish totally perfect, but it did have a nice push, just like Morgan Stanley did here. So, go over the VWAP, enter, right? Because it opened in the middle of the range. And for Bank of America, 27.82, right? Good 20-25 cent move on Bank of America is actually pretty good, right? Okay, so those were those ones, and then I'll just take a look at a couple other ones. Obviously, Facebook didn't work to the long side, neither did Netflix. Twitter Didn't look at Twitter today. Yep, Twitter, see, same thing here, just like Google did, inside 60, right? Tried to test the top of the range, failed, to the downside, right? So it did look interesting long. I did trade Monster long. I do have call spreads on this one. I do think it can close over 57 by the end of the week. At least that's my assumption. Because you have the inside week hammer to the upside after good earnings. You've got the 5MA curling over. Could cross through, and I think we at least close above 57. Might hit 20, maybe be at 57.50 or 58, but I think we close over 57. So I think it's a good strategy with the, with the call spreads. Our orbs today, were pretty good. They just kind of came out this morning. There wasn't a lot of earnings this morning, but Apple, obviously, you could have traded the 15-minute orb at the open. Just let it do its thing. I think was a little bit strong in the morning. Let's see if it came back in. Yep. So strong in the morning, came back in. So your entry here on the 15-minute orb, right? And this had news. Florida was suing them, and then Amazon was competing with them again. So, double whammy on that one. So good 15-minute orb for that one. Took that one, to the downside. So 79.40 all the way down to 77.98. So a good 1.5 points on CVS. WBA I know is good for at least 20 cents at one point. So here's your orb. You could wait. Obviously you had to wait for it. Didn't trigger until here, till 11:15. You took that down at 82.31, all the way down to 81.72. So good for over 50 cents, 60 cents. So and these things just work well. And COP was like some weird selling a part of their business acquisition news. Would have been tricky to trade today. I just thought it'd be interesting with an oil type trade. So could have got a quick spike here, and then it triggered again here, 66.96. I'm sorry, 65.96, all the way to almost a point there. So the orbs are good. And tomorrow we've got a couple interesting ones I'm going to post on the game plan in a little bit. Which hopefully we should give us some pretty interesting stuff for tomorrow. Let me add one more thing to it here. Not a lot of stuff on the long roast. Let's see. Monster still looks good, even though I'm in it. I'm not trying to pump it or anything like that, but it does have a pretty good setup. So I'll put that there too. Cool. And that's basically what I got, guys. I hope everybody kind of thinks about that risk thing. It's really important. So at this point, if anybody's got any chart requests or questions or anything like that, anything about how I look at trades or in general, kind of what I'm talking about, feel free to ask. I got a lot of questions about orbs. Hopefully that makes more sense to any of the new folks joining today. So feel free to chart requests. And if you want to send me a DM or if you want to, what's going on, Paul? So free feel to do that or put in the comments and all that stuff. Yeah, PayPal, goodness gracious. That was on, thank you. Yeah, I meant to mention that. That was a game plan item too, short. Would have been great. I didn't trade it today. I got an old alert on it. And I was like, oh yeah, PayPal, and it had already just puked. So, I mean, it was okay. So we had so PayPal had a couple good setups. Right, it was inside day, right, red, and so you could have traded that to the downside. Look at that. Oh my goodness, 5 points on that today. Fantastic. And then you could have done that, which would have triggered the inside week down, which was here. 83.07, right, all the way down another 3 points for the inside week. So obviously your monthly going red on the month. I've already taken this down. You can try. I think I've got an alert here just to kind of keep it. Maybe it's an old alert. Maybe with this hammer, I think I have an old alert there. If that failed to the downside, actually, if this does take that out, there is more downside there too. So some PayPal is looking extremely weak. Finish with high volume on a red bar under the VWAP. This thing could keep going too. But today was the day. I mean, really, because it was inside day down. It was a game plan item. So it's definitely one that we should have been focused on. I didn't quite play it or anything like that, but it would have been good. I knew a few guys that were in it. So let's do a quick pitchfork here on this one. See how it looks here. Let's go there. It looks kind of interesting. Activate. There. So that looks a little more interesting, doesn't it? So yeah, it looks like off of this pitchfork, obviously we went down. Now we're in the middle of a range, but it did fail here. So I mean, obviously you could, look at that consolidation there too. That's just beautiful. Yeah, so tried to the upside, coming back down. So it may have some more, like we said, some more room to the downside. Obviously, you could take out this pivot too, so it does, have some potential there. So further downside. So nice. What's going on, Carl? Microsoft, Intel, both look interesting if you want to take a look. But inside 60s, and both with nice gaps to fill to the downside. That's what I'm talking about. All right, well, let's look at Microsoft. Great stock to trade, great options to trade on this one. Usually very liquid. It gives great opportunities on that. Let's just run through real quick. Okay, so had a huge run up, right? I mean, this is back in 2016. Just Microsoft was always just doing nothing, right? And then it just started having these huge green days. I was like, whoa, what's going on? And now it's just kind of pullback tagged its monthly 10 MA, and then now it's kind of like you said, coming back in a little bit. So definitely interesting there. Red, just like the rest of tech. I haven't seen a lot of insider selling going on this one, but we'll see. Weekly, I'd say it tried to take this kind of a hammer it put in last week, but it was red, right? So it tried to take out that tail today. You can see again if it tries to push down below there. If it does, looks like we're looking at the weekly 50 MA around around $100. I imagine there's going to be a lot of defense on Microsoft around $100, just that whole number defense, but would be worth trying. Let's see, yeah, 180-degree move to the downside. Really looks like it wants to hit that 101, that 200-day moving average. See what it did last time. It tagged it, bounced. It's probably going to want to try it again at some point here. I like how red day with more volume, right? So that looks good. And like you said, this is awesome. Inside 60, anchor to close. Let's see. Yeah, if it breaks below that, we'll definitely keep an eye on that. And we'll take a look. You never know, the market might get strong. But definitely preferring to the downside. But yeah, it could break that tail, this inside 60 tail to the downside, and then we look at. Let's see what we got going on in here. Let's see what that looks like. Pretty good. Let's just activate. That looks pretty interesting there. Middle of the range. I like. I like this pivot a little bit better. This gives a little more interesting. It looks like it tried here, pivoted, came back up, pivoted, came back down. Now it's pivoting here. So just like you said, keep an eye on it. We've got, like you said, a gap. Where's that gap? There's a gap here. Did that fill that? High 104.02, low 103. So it did kind of fill that gap there. But there might be more below too, certainly. But definitely worth keeping an eye on. We're kind of in the middle of the range here on this, try to touch this median line here. So definitely worth keeping an eye on. And then Intel, the stock I never trade because it just is like molasses. I know you can show me an example of big bars where it moves, but it's just, trading Intel. Anyway, look at that green month. Interesting. Had a green week last week, but obviously red on this week because we had a red day. So that would actually be interesting there too. I just want to say that's a weekly hammer that I didn't catch. So it could be good there. And of course that tail could fail, which I call a tail fail. And tail fails usually get like some momentum to the downside. So tail fail weekly there. And then let's see, daily. A bit of a reversal day. Try to get up to the 200-day and was like, nope, don't want to do it, coming back down. Didn't even take out that high, right? So, you know, so still kind of, you could probably draw like a nice trend line there. Yep, but inside 60 under the VWAP, which is always fun for us to trade at the open. And that's how it can move a little, everything can move a little bit at the open. See, that was like a pretty good, see, inside 60 there. Was that inside low 88? Yep, so inside 60 here. You can see that just the day, on Friday, it just took that, boom, to the upside. We had a nice morning that morning, so. So we watch this one to the downside now. So yeah, good ones, Carl. Let's see, let's just draw, let's keep an eye on this here. I see, that looks interesting. Nice little pivots here, let's see. There. The beat. A little tricky on this one. Definitely worth keeping an eye on, right? So, obviously it looks like it, could have pivoted here. It's coming down. So lots of potential to the downside as well. So, nice ones, Carl. Oh, from July? Nice, yeah. Fantastic. Gotta love that. What's going on, Javier? Last price closing hammer didn't seem to work. The inverse hammer, you can take a look at that one. Yeah. So it worked. I think I looked at it a little bit. It was I got an alert on it so early that it was it would have been impossible for me to really trade it. I was looking at other stuff, but you could have traded it quickly, right? So, and you know how I like to trade. So if something goes green, move your stop up and take profit, right? So here you have a high of 111.59. It goes up to 112.78. So it did work for a point, right? So and then look at that, it jammed right into the moving averages right here, which would have been a good place to kind of move, to kind of be like, hey, I'm going to get out here anyway, right? So I think there's some potential. It just didn't close super strong, right? And I don't swing stuff unless I really announce it and I'm like, hey, I feel confident, right, in this thing. But it did work for a point. So let's see. I mean, it gave a real good push at the open. So if I had a push like that, and if I was trading this one, me, I would have moved my stop up and just kind of trimmed and trailed all the way up right there. So there was some good potential on that, the upside, but obviously the market had other thoughts, right? And then you could have traded this to the downside, right? Because it kind of turned into a 60 shooter after that, and then from the 60 shooter, you could have taken it down here, right? So then you jump here to the hourly time frame. You're like, okay, let me manage this, right? So, right, we never hold on. We don't get married to trades, right? We don't hold on to them like it's going to work forever, right? Nothing does, right? I mean, we've seen that just by looking at the monthly charts, right? Things have gone on for a long time. They come back in, and everything has tops and bottoms, right? On each bar, right? This had a top and a bottom, that had a top and a bottom, right? And so we just got to maximize our wins, preserve profits, and then move on to a better trade if we can. I mean, you could have looked, like I said, you could have traded this both directions too. So hope that helps. So yeah, you guys saw I posted Tesla for tomorrow. I never like posting Tesla. I never recommend really anybody trade it ever. But when it works, it works. So keep an eye on this one tomorrow. We'll see, right? I mean, it's just, you see I've got a lot of lines here because it's such a complicated stock and it's interesting to watch. 347, so you could make, $6 on this thing potentially. I mean, if it really wants to, right, it could, here's this is the first action line. This is the resistance line, right? I mean, so if it really wanted to, I mean, it could, kind of jam into this. It could jam it here at the median line.